I'm Greg Hunter. Welcome to USAWatchdog.com. Back by popular demand. I've had several people on the USAWatchdog.com site and on the YouTube channel say, hey, you ought to get that Hugo Salinas Price back on. And he has been gracious enough to do so. I welcome Hugo Salinas Price. Hugo Salinas Price, thank you for joining us today on USAWatchdog.com.
Good to be with you, Greg. It's always a pleasure.
Listen, your last three posts on your own website, I believe it's plata.com, is that right?
That's right, plata.com.
Plata.com. You have an English version, you have a Spanish version. But your last three posts, your latest, and I want to start with this, the revaluation of gold, the coming revaluation of gold, $1 trillion in bonds turned to cash, and the crumbling world order, and who's going to pick up the pieces. They all are kind of interrelated, but I think it all is relating back to precious metals, gold, silver, real money, which is why I want to start with the coming revaluation of gold. Do you see a change that has happened as the reason why you are writing these pieces about revaluation?
Well, I do think that there has been a change in the world attitudes. That the world attitudes since I was a boy in high school in 1948 has been a world of let's say a positive outlook of growth, of ever more wonderful things happening, expansion, rising level of living standards. Is the word I'm looking for, and I think that the expectations of the world. This is where I may be mistaken. But I have the feeling, and it's just more a feeling than anything that I can. It's based on a lot of things that I've had to input, and I think other people also can point to this statistics. I'm not good at statistics, but I have this feeling that expectations around the world have changed. Then the attitude towards growth and debt and expansion in the world has changed, and now the world has become suddenly more conservative in the sense that it wants to get out of debt, it wants to consolidate the business, not expand, just keep what you have and get out of debt. There's too much debt in the world. I think a lot of people would agree with me on that who are studying the world scene. There's too much debt. I've heard it said time and again over the last few years, the huge debt that has only grown since 2008. And the derivatives on top of that debt are also colossal. And now I think we've come to a breaking point, a change. And I have this graph. I don't know if I can show it to you. Can I just put it in front of my face to show it to you?
Sure.
Look, here it is. Here it is. Look, I'm talking about central bank reserves. Now look, for 66 years, we had this growth in reserves. Beginning here, it takes off in 1971, where the dollar goes off gold. And so reserves can grow if the United States produces more dollars. There's no limit. And here is the graph of debt. This is central bank credits received that have grown the central banks of the world up to this point. August of 2014 shows the breaking point. And now we've seen a new trend. This hasn't happened. Here's the last 18 months here.
Going down.
Graph, and something has changed. Now the reserves are going down. I've been following this since about 1995 or 1996. And I'm not a graph person. I'm not a statistics person. I deal more in principles. But this is one figure that I have followed for years and years and years.
That is the proverbial hockey stick pattern, which is going the hockey stick pattern word. A hockey stick goes zip and then goes straight up at some point. The hockey stick.
here now there's been a blow off, and now we're in it. The trend has changed, and I don't think that trend can be changed very easily. I don't think it can be changed. It would need a complete reversal of what I think are the world's expectations, and I don't think they're going to change easily. Now we're now in the contraction phase, and when the contraction sets in, it reinforces itself. When I call a debt on somebody, that party is going to call in the debts that are owed to him, and those debts, there's a cycle goes around where everybody is trying to collect from everybody else. See, so it reinforces itself. And when we come to the end of this contraction phase, we're going to find a world where there is no other recourse but to revalue gold so that it makes debts payable. It makes money much smaller and less weight, because now we have a lot of gold money that has gone up in value. Maybe some people are saying $8,000, some people are saying $10,000, others are going as far as $50,000. I don't know what the amount is going to be, but I think that revaluation of gold is going to have the effect of diminishing the weight of debt on the world. And I think that is going to take place. I don't know when, but I think that is coming. That has to come. That will be the outcome of this century of inflation that we've had. Since 1948, and even before that, we began with fractional reserve banking and off the gold standard in 1914. And so I think that we are approaching a revaluation of gold.
And this bond debt, I mean, you're saying that, you call in a debt and then somebody else calls in a debt and somebody else calls in a debt, but a lot of this debt can't be paid. Aren't a lot of people just going to have to write this off? For example, Puerto Rican bonds. They're already saying they're not going to pay 3.5 million people with $71 billion in bond debt. North Carolina has 10 million people. We might have $1 billion in bond debt in the state of North Carolina. Puerto Rico, $71 billion in debt. They're saying we want Congress to give us Chapter 9. In other words, they want to just default. Aren't there going to be tons of Puerto Ricos out there that just say, sorry, we're not going to pay, we can't pay?
Right. When everybody has defaulted, where do we go from there when everybody has defaulted? The only thing remaining will be to revalue gold. Now, there's 183,000 tons of gold, at least, in the world. Some people think that there's a lot more gold in the world than 183,000 tons. And when gold is revalued, officially, all gold is revalued, not just the gold in the central bank reserves. All gold becomes, the gold on your finger, your wedding ring, becomes worth a lot more because gold has been revalued. So this gives people the wherewithal to start over again. You see?
In silver, the people that watch silver are going to be saying, ask him about silver, ask him about silver. So what about silver?
Silver will go up as well with gold. The silver will also be revalued in some way. But I think one of the two has to be revalued, and I think the revaluation will come with gold, and silver will benefit from that, of course. Along with it, it's not going to stay behind at a ratio of 1,000 to 1. I mean, it's going to preserve some ratio with gold.
What do you make of all this?
It is a monetary metal, so I think silver will go up, and it's necessary too to have silver because gold at a huge price will not allow people to go to the market with gold. To buy foodstuffs, you have to have something else to buy with foodstuffs. You're not going to buy it with gold because it's going to be far too valuable. So you're going to buy it with silver.
You think there'll be a day where either we'll have physical silver in circulation and or money or paper money or digital money or some money backed by gold and silver?
Something like that, yes, something like that. I think that we will have paper money backed by gold and whose issue will be limited by the fact that if you issue too much paper money, then it's going to be worth less in gold. You'll be devaluing against gold, not against the dollar. So that's vague. I only can have a rather vague idea of what's coming, but I think that gold is going to return in force as a last resource for the world after this orgy of defaults that is coming.
Is this why? Is this part of the reason that you had one article about $1 trillion in bonds turning into cash? Is this your liquefaction of some of those bonds you were talking about, raining down on people, that the bonds will liquefy, and somebody is liquefying them? I guess it's the United States government covertly.
I think it's part of the process of defaulting. Is when you're selling those bonds. Who bought the bonds? $1 trillion of bonds. Now I'm not a very sophisticated financial person. I'm just a thinker, Greg. But somebody bought those bonds. Is there such a demand in the world that 1 trillion of bonds can be put on the market in 18 months and the price of bonds was not affected and the interest rate did not go up? Who bought the bonds? Did the Fed buy them? This is a question I would like to pose to the experts to tell us. Well, who were the purchasers of those bonds?
We know they were sold, $1 trillion. We know they were sold. Who bought them?
It was $1 trillion, yes. And who bought the bonds? Because we know they were sold. They're not on the list anymore. Here they are. Bloomberg tells us that. Bloomberg's omitted the information for a couple of weeks, but fortunately they're back. Every Friday we get the information. Last week, the bonds, the central bank reserves grew a bit, yes, last week. But I think it's just a blip. I'm waiting to see next Friday. Is the trend broken or will it continue?
Do you think that chart that you have there, right now it's got this long drawdown right now, do you think that could pick up and start going down as fast as it went up?
Well, I think it'll go down faster than it went up. It's not going to take 66 years to go down. No, when we get into liquidation, that is fairly. We can see 1 trillion went away in 18 months. It's not going to go down slowly. It's going to go down fast.
And you think that the speed of that pace has already picked up when you say that people want to get away from debt and not want to expand? Do you think that is the ding ding ding, the bell ringing at the top of the bond market, which evidently to your chart and to your thinking, saying 18 months ago? I mean, the top was 18 months ago.
That's right.
I think it's only downhill from here.
And an interesting thing was that all through 2013 and through 2014, I was watching the growth of the central bank reserves to see because for years I've been wondering, well, where was the top going to be? If you've been watching something for 20 years, you say, well, when is this going to top? Because this has gone parabolic. And everything can't go on forever. So I began to see in 2013 and 2014 a slowing down. The growth is not as fast as it was in previous years. And then slower and slower, there's less and less increase until August 2014. Finally, there was no increase, and the next week there was a decrease. And the decrease and a decrease and a decrease, and that has continued up until now.
Would you call that the peak debt moment, August?
It looks like that to me, that it is a peak debt of central bank reserve. What has happened in the world? our exports are down because the importing countries are not importing. You see, the reserves are formed when the countries that issue reserve currencies, those are the United States, the European Union, Britain, and Japan mainly. Those are when they're not importing, then the exporting countries are not exporting. And if they are not exporting, they don't have extra reserves. I don't know if I made myself clear. In order to have reserves, you have to sell more than you buy. Mexico has to sell more things than it imports to have growth in reserves. Now, if there's nobody to sell to, we don't get a growth in reserves. And what happens then if our industries here in Mexico, concrete case, find that their customers in the United States are not buying from them, then their business is not doing well. They begin to want to get out of debt, right? Because they've borrowed to grow their country, their businesses. They've borrowed from the United States, they've borrowed dollars. So if their business isn't doing so well, they want to get out of dollar debt. And then they go to the central bank and say, I need to pay off $10 million of my debt. So the central bank has to give them $10 million so that they can pay off their debt. Now the central bank, how does it get the dollars? It sells off reserves. So the central banks around the world are selling off their reserves so that they can give those dollars to the debtor companies in their so that they can pay off debt.
So they don't go bankrupt.
So, yes, they have to pay off they want to pay off debt because the business is weak, so they want to get out of debt. So they have to buy the dollars and to get off the debt, and the central bank, to give them the dollars, has to sell reserves.
And this theory of yours, peak debt, this is a global phenomenon?
A global phenomenon, yes. The world has too much debt, and now it's trying to get out of debt. That's what's going on.
And it peaked in August of 2015. That's when you say, bing, right here, right at this point, August 2015, we hit the max, the limit on how much debt you could cram into.
2014. 2014, yes.
We hit the limit on how much you could put into.
I'm watching this for 20 years and never saw the likes. Always growing. Now something has changed. Now a big change of this sort. This is an enormous event. I think it portends a new trend, and that trend will be to get out of debt, deleverage, pay down debt. And that's, of course, a contraction. Contraction means depression. The world is going into a world depression. It's going to get very nasty. That's what I think. And the end result is nations, governments are going to realize they have to revalue gold because that's the only thing they'll have left. That have to resort to that to keep trade coming in. You see, because no country is completely independent economically. We all need things that others produce. So that we can produce, we need others to help us. And in order to have that world trade going, we're going to have to go back to gold. That's my vision anyway. I might be mistaken, but that's my vision.
Some people would say, we're going to go to Bitcoin or e-dollars or cryptocurrencies or things like that. And you're saying, yeah,
I hope you're not promoting the Bitcoin.
I'm not promoting it. No,
let's not even waste time on that. I mean, people are so easy. It's so easy to fool people.
I mean, it's Bit Computer Program is what it is. It's Bit Computer Program. It's not Bitcoin.
Yes.
That's why they call it coin. Like, there's something there tangible. No, it's a computer program.
There's nothing there. There's nothing there absolutely, and people are so easy So it's so easy to fool people. People are sort of in love with technology. They think that technology can do everything. Well, the Bitcoin is like asking us to live on pills instead of eating steak, you know? It's you just can't do it.
Yeah.
Just won't cut the mustard.
And one last question. People say they're getting out of the dollar, they're getting out of bonds. Actually, they're not doing it because they don't like the dollar. They're getting out because they want their money. They're cashing out. You're saying that they're cashing out of all these bonds because it's the last thing worth anything left. Is that right?
Well, I think I understand you. Yes, as people try to get out of dollar debt, they are going to force the central banks to sell off reserves. And where is that going to end? We are going to see a world in contraction. We are seeing a world in contraction. Now, some people are alleging that all of this has been provoked by the fall in the price of oil. I'm not so sure that is the factor. I'm not so sure. I think that the main factor that is driving this is excessive debt. And if the price of oil recovers, I'm doubtful that this will change the trend towards liquidation around the world. It seems to me that a trend of 66 years from 48 to 2014 has changed. And if I see evidence to the contrary, well, I'll recognize it.
Do you think gold, the price now is at a bottom? Some people say, oh, it'll go down much lower from here. Do you think gold's pretty much at a bottom? It's been trending up the last few weeks. What do you think about gold and silver? Is it at a bottom? Is it already starting to happen where we're revaluing against gold in a small way?
Is acting. I watch gold very closely, and I see it acting positively. I think it's bullish. We're seeing little spikes. But I mean, if you're at 1,000 and something goes up $3 or $10, well, it's no big deal. But it is a big deal compared to what we've been seeing, and we're seeing spikes of $7 and $10 in gold. And last I saw, we were at 11.27, and that's significant. It's very small, but it's showing that there is a growing interest in gold once again. Now, where that is going to lead, I don't know. Maybe it'll be smacked down again. I don't know. But I see that there is more interest in gold. I perceive it than the last couple of months.
And eventually, no matter what, all this debt is revalued against gold. Gold's going to go higher.
It's all going to be resolved finally in a revaluation that will take not only central bank gold, but everybody's gold is going to be worth more. And that's what is going to pull humanity forward again. We're going to work on the basis of gold, a more solid basis.
Hugo Salinas Price coming to us from Mexico. Hugo Salinas Price, thank you so much for joining us today on USAWatchdog.com. I'm laughing, I'm giggling, I'm just very excited to have you on. Really, thank you for coming on.
Greg. It's good to be with you. Bye.